Dear students, today we are going to focus accounting for liquidation of companies. In previous period or lecture, we discussed the meaning of liquidation, types of liquidation, appointment of a liquidator. In the present lecture, we are focusing liquidator's final statement of account. When a liquidator is appointed, all powers of board of directors are transferred to the liquidator. A liquidator is a person who entrusted with the work of liquidation. Liquidation may take place by three ways: compulsory liquidation, voluntary liquidation, and voluntary liquidation under supervision of the court. After appointment of a liquidator, it is duty of a liquidator to prepare its statement called as liquidator's final statement of account. This statement is not an account. There are two sides of statement. One side is receipt side and another side is payment side. Liquidator is authorized to realize assets and pay off liabilities of the company. It means that a liquidator sell assets of the company and pay off the liabilities of the company. Liabilities are paid according to priority list laid down in the Companies Act. Liquidator takes control of the company. He collects its assets, recover call in arrears, uncalled capital if necessary, and pays its debts as per the due order, and finally distribute surplus if any among the shareholders in accordance with their rights. All the transactions are cash transactions. So liquidator has to maintain a cash account. There is no chance for credit transactions because it is a liquidation procedure. So cash transactions are very important, and a liquidator is concerned with cash transactions. Therefore, he has required to maintain cash account. After the completion of winding up the company's affairs, a liquidator has to prepare an account showing the disposition and disbursement of company's property. The account is called as Liquidator's Final Statement of Account. Liquidator's final statement of account is nothing that is statement of showing receipts and payments made by the liquidator during a particular period. A liquidator prepares final statement of account which is in the form of receipt and payments. There are two important sides of liquidator's final statement of account, namely receipt side and payment sides. Every coin has two sides as well as here we are focusing two sides. One side is receipt side and another side is payment side. Firstly, we are looking receipt side of liquidator's final statement of account. Receipt side shows cash in hand, cash at bank, cash received on realization of asset, that is known as assets realized, cash received from managing agents and other officers of the company who found to be guilty, calls in arrears recovered or collected, surplus from secured creditors if any, calls on partly paid shares received. These are the items which are recorded under receipt. It means that this cash collection is very important here. It is the authority given to, to a liquidator to sell assets of the company and get it proper value. After receiving various cash amounts, a liquidator has required to pay liabilities as per the priority list fixed by law. A liquidator has required to make payment to the concerned party according to the priority laid down by the Act. The priority or order of payment is as follows. First payment is stakeholder creditors. This is stakeholder creditors, but generally stakeholder creditors directly we are not mentioning to the payment side. Automatically it is adjusted on receipt side because stakeholder creditors are the creditors which are secured on the which secured property. It means when a property is given as security and then creditors provide amount to the company. That's why they called as secured creditors. And secured creditors are not directly considered under payment side. Instead of payment side, they are recorded to the receipt side by way of deduction or surplus. Then, in generally, first item is coming instead of secured creditors. We are considering first item law expenses. It means that legal expenses incurred for liquidation procedure of the company. That expenses are recorded under payments. Liquidators remuneration. Liquidators gets remuneration in the form of commission. There are three types of liquidators remuneration. One is fixed remuneration, another is remuneration on the basis of asset realized, and third one remuneration on the basis of payments made to the concerned party. Then number four, liquidation expenses. It is also known as cost of winding up. Preferential creditors. It covers taxes, cesses, rates, wages, salaries, holiday remuneration, investigation fee, etc. These are the preferential creditors. Taxes payable to the taxes of the government. Debenture holders oblique creditors having floating charge on the assets of the company. Then unsecured creditors. It includes sundry creditors, bills payable, bank overdraft, outstanding expenses, part of secured creditors not paid, etc. Then preference shareholders with dividend in arrears. Then equity shareholders, that is ordinary shareholders. It means that there are 9 items mentioned under Payments Act, but actually we are showing 8 items. It means here we are not actually considering secured creditors under payments. Except secured creditors, all items are recorded in our practical solution under payment side. I am also recalling these 8 items as first is legal expenses, second is liquidators remuneration, third is liquidation expenses, fourth is preferential creditors, five is debenture holders or creditors having floating charge on the asset of the company, six unsecured creditors, they are also known as ordinary creditors, seven preference shareholders with dividend, and eight equity shareholders or ordinary shareholders. This is the priority list fixed by the law. While making a payment, a liquidator should consider this priority list and make payment as per the priority list given as per the Companies Act. The liquidator has to call a final meeting of the company and submit a final statement of account before it and send a copy of the account to the registrar of the company's court, members, creditors, as the case may be. This statement is referred as to liquidator's final statement of account. The form of liquidator's final statement of account is given below. There are two sides of liquidator final statement of account. A liquidator is appointed by members if the voluntary liquidation is taken place by passing resolution in general meeting. There are three types of liquidation, but we are focusing voluntary liquidation. A liquidator has required to prepare a statement called as liquidator's final statement of account. It consists of two sides, receipt side and payment side. On the receipt side, various cash received items are recorded, whereas on payment side, payment is made to the concerned party as per the priority list fixed by the law. A liquidator has required to call a final meeting for approval of statement prepared by him, and a copy of that statement is sent to the registrar of companies, court, members of creditors. The format of general format is given here regarding liquidator's final statement of account. Firstly, we are concerned with receipt side. Under receipt side, following items are recorded. Firstly, recorded cash in hand when it is given in balance sheet. Then to cash at bank. Then to assets realized means assets sold by the liquidator in the market. He will wait for getting better price to the asset. Therefore, after selling of asset, amount realized is called as assets realized. From this, secured creditors are deducted if paid. If the asset secured sold by creditors himself and surplus given by them to liquidator is recorded as surplus from secured creditors. Suppose a land and building is given security and a land and loan taken of rupees 5 lakh and security given is 8 lakh. It means by considering the nature of transaction, we may decide whether it is surplus or not. There are two types of creditors, secured creditors. There are two types of secured, fully secured creditors and partly secured creditors. Partly secured creditors means the asset partially given as security, that asset sold in the market by the liquidator. That amount is deducted from asset realizer called as secured creditors. If the fully secured creditors means the if the secured asset is sold by the creditors and excess amount hand over to the liquidator called as surplus from secured creditors. Then payment side. Firstly, we are recording legal expenses, law charges. Then liquidators remuneration. There are three types of liquidation remuneration: fixed remuneration, remuneration on the basis of asset realized, remuneration on the basis of payment made to the concerned party. Then liquidation expenses, preferential creditors. This is the payment order. We are also again looking receipt side. Also, these two items are recorded under receipt, namely calls in arrears recovered if any, to calls on partly paid shares received if any. Then payment side after preferential creditors, debenture holders are considered as principal amount payable to them, unpaid interest till repayment, and total of which is shown as payment to debenture holders. Then unsecured creditors. It includes creditors, bills payable, bank overdraft, outstanding expenses, part of secured creditors not paid, and total of which is recorded on payment side as unsecured creditors. Then preference shareholders. Under these two things are mentioned. First is capital. Add arrears dividend up to liquidation. That is very important. We are considering dividend up to liquidation date. On the other hand, we are considering payment to debenture holders till repayment date with unpaid interest. Lastly, if any amount remained that will be paid to equity shareholders, then total of both sides. A question may be asked in our examination that closure of company means dot 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 liquidation, not perfect liquidation, opening, opening and closing. Correct answer is closure of the company means liquidation. How many types of liquidation? There are three types of liquidation. Alternatives may be provided as 2, 3, 4, 5. It means that there are three types of voluntary liquidation. A person who is entrusted with the work of liquidation called as. There are four alternatives: accountant, auditor, liquidator, secretary. The correct answer is liquidator. How many sides to liquidator's final statement of account? There are two sides to liquidator's final statement of account. Now we are focusing certain important notes. First note, secured creditors. What is meant by secured creditors? So I am given in detail a note regarding secured creditors here. The secured creditors means the creditors to whom a particular asset or assets of the company are given as security. It means that creditors are giving loan or amount to the company on the basis of security given by the company. The secured creditors are the creditors to whom asset or assets of the company are given as security. The secured creditors may be fully secured creditors and partly secured creditors. The asset given as a security is generally sold by creditor himself. In case of fully secured creditors, the surplus from secured creditors is recorded on receipt side of the liquidator's final statement of account. If the account if the amount realized from sale of security by the liquidator and then fully secured creditors will be paid out of their security. At that time, amount realized from sale of security will be included in asset realized amount and then amount of fully secured creditors is deducted from the assets realized. It means that if the secured asset is sold by creditors, it is not recorded under asset realized. If any surplus that should be considered termed as surplus from secured creditors and recorded under receipt side. But if the asset is sold by if the secured asset is sold by liquidator, it is considered under assets realized. Partly secured creditors will paid in part immediately equal to their secured amount and remaining unpaid amount will be added in unsecured creditors. We are now considering partly secured creditors. For example, if the claim of creditors is rupees 4 lakh and amount received from security is rupees 2 lakh 40,000, it means that we are here able to make payment of rupees 2 lakh 40,000 because asset realized for that amount. But actual amount payable to creditors is 4 lakh. Out of 4 lakh we are paying here 2 lakh 40,000 and an unsatisfied balance or remaining claim of rupees 1 lakh 60,000 is added to unsecured creditors. It means recorded under unsecured creditors on payment side of liquidator's final statement of account. Another note, calls in arrears. Generally, calls in arrears are recovered by the liquidator and the amount is to be shown on receipt side in the liquidator's final statement of account. If need arises of money at that time, liquidator calls in arrears and that received amount is recorded under receipt side. If there is a specific instruction regarding shareholders did not pay the calls in arrears, then such shares are to be treated as forfeited shares and no amount will be refunded to such shareholders. At the time of liquidation, it is the duty of a liquidator to sell assets of the company at proper value and make payment to the concerned parties as per the priority list given by the Companies Act. If there is amount of calls in arrears, that should be covered by the liquidator if necessary. If the amount of calls in arrears after calling not received under that circumstances, the already amount received on calls from the members termed as forfeited shares and no amount will be refunded, that amount will be refunded to the shareholders. Next, another note, calls on partly paid shares. If cash available is not sufficient, if cash available is not sufficient to pay the claim of outsiders, the liquidator can make a call of necessary amount. If the cash is not sufficient to make payment under that circumstances, the liquidator can make a call of necessary amount. While making calls, it should be made first on partly paid equity shares, then, if necessary, on partly paid preference shares. While making a call, a liquidator should consider firstly equity shares, then preference shares. The amount received on calls on partly paid shares is to be shown on receipt side in the liquidator's final statement of account. It means that amounts received on account of calls in arrears and calls on partly paid shares are recorded under receipt side in liquidator's final statement of account. 50TS assets in the balance sheet not to be considered while preparing liquidator's final statement of account. 50TS assets which are given in balance sheet are not considered anywhere. For example, profit and loss account, that is debit balance or loss, preliminary expenses or formation expenses, discount on issue of shares, discount on issue of debentures, advertisement suspense account, etc. All these are unwritten losses. Hence, these items are straightway neglected while preparing the liquidator's final statement of account. Unwritten losses. It means fictitious assets which are shown on asset side in the balance sheet are not considered at all while preparing liquidator's final statement of account. It is very important. Note number 5, undistributed profit items in the balance sheet to be neglected. There were unwritten losses. Now we are focusing undistributed profit items. These are given on liability side of the balance sheet of the company who goes into liquidation. Undistributed profit items like profit and loss appropriation account, that is credit balance, that is profit, share premium account, share forfeited account, capital reserve account, revenue reserve account, sinking fund account, etc. These are undivided or undistributed profit items not to be considered while preparing the liquidator's final statement of account. In this way, in the present lecture, we focused on liquidator's final statement of account. It includes two sides. One is receipt side and another is payment side. We also discussed items recorded the receipt side, and priority list as per the law for making payments on payment side. In addition, we focused some important notes, that is stakeholder creditors. Then we discussed unwritten losses and undistributed profit. So a question may be asked by different way. It may be asked as a short note. A short note may be asked like liquidator's final statement of account. Write short note on liquidator's final statement of account, or write short note on stakeholder creditors. Multiple choice questions may be asked like stakeholder creditors are the creditors to whom security is given. But how many types of security creditors? There are two types of security creditors: fully security creditors and partly security creditors. So, like these questions asked in incoming examination. Thank you for patiently listening.